Hi, it's Lee, and welcome to the Tesla Economist. Most people in the Tesla investment community talk about investing long term and looking at holding until at least the rest of this decade. And even after then, it's probably not likely you're just going to sell all your shares and retire with cash in the bank. You may sell a reasonable amount and buy a house or pay off your mortgage, buy a plaid, a holiday, and set aside some money to live on. Either way, you will often hear people talk about holding Tesla long term. Why? Because we're investors. Investing really means holding on for about 10 years, whether it's real estate or stock, and that's probably minimum. You want to hold on as long enough to go through 2 or 3 economic cycles to make the big gains. And inevitably, that means you go through some booms and busts during that period. If you purchased in the boom and are now experiencing the bust, then I understand it's not particularly pleasant. But ask yourself, are you a real investor? Or were you someone coming along for the ride and hoping to get rich quick, thinking that Tesla was headed straight to the moon non-stop? If you're a real investor, then you have 10 more years of holding, and hopefully this may be about the least your Tesla shares are worth over that time. Admittedly, Tesla did look like it was headed to the moon faster, and we were meant to have 4680 cells probably around a run rate of about 150 gigawatt hours a year by this stage, according to Battery Day, at an insane cost saving and much higher energy density. Then the Cybertruck was meant to be launched already at insanely competitive prices, and Tesla would just be the biggest company in the world. Then robotaxis making profits that tower over everything in history. Elon swept us off our feet with what he had done in the past. It was so easy to believe the future he was telling us. And even if Tesla just got remotely close to those objectives, the numbers still looked crazy good. No one wanted to miss out. And even if this had come into fruition, now Tesla would have still been solid through this recession. But good things take time, or longer than what Elon usually says. But if you are of retirement age now and actually wanting to sell some of your shares to live on and enjoy your retirement, then that's what they are there for, even if you're down now from the high. If you were a true investor and had set this up for your retirement, then you likely did buy 10 years ago and knew how to hold for that prolonged period. And congratulations to you. You're up almost 100 times. Sure, you may have been up over 200 times at one stage, but being up 100 times is still outstanding, even if it's less than half as much compared to the boom. You understood investing was long term. Hey, even if you've been investing in Tesla for just a couple of years, you're still doing outstanding. Again, despite being up over twice as much as before, but still, you shouldn't be complaining. When else have you had such a great return? Other than that, if you are complaining about being down because you did buy at the top, then you need to deal with that. You need to focus and work out, are you an investor prepared to hang in there for the long term, even if you won't be up all the time? Or were you just gambling and being greedy, hoping to get rich quick? There have been times before when Tesla has dropped similar amounts from the high to the low, and many held on through those times, and now those former losses look negligible compared to what the stock is even worth today. Us long-term investors expect the same within time. Elon even telling us he thinks Tesla will be worth 10 times what it is today, hence why we are prepared to hold for this long, and don't intend on taking any of this profit until perhaps we want to retire. In the meantime, we have jobs or businesses or other investments that we can live on until the big payday comes, hopefully one day. If we believe that EVs are the future of autos, then Tesla will keep reducing the cost of their vehicles and thus potentially the purchase price, and find the demand required for additional production in order to hit the numbers that match the current stock price at a fair PE ratio. Or even if EVs weren't to be the future, Teslas will still sell well enough to grow into their stock price too. EVs do, however, very much look like the future, and with governments behind them too. We say long term, as in the end of the decade, but perhaps some people just say that to cover themselves, so if the stock price goes down so much in the meantime, they can just say, it's still not the end of the decade yet. However, I think by the middle of this decade, we'll certainly see a big difference. Just hitting 100 gigawatt hour run rate for 4680s in Texas is likely to mean that we have about 6 times earnings from what we currently have based on the trailing 12 months. A run rate we have been told we would hit this year. But even if it's sometime next year, then that's still a big difference and worth waiting for. This is what us long-term investors are wanting to wait out. Watching Tesla grow their production, watching them ramp up these 4680 cells to larger quantities. We're just not simply waiting until 2030 and hoping demand has increased and prices are down and it's just simply happened. We have identified the core elements within the company that need to be addressed. We've heard Tesla and Elon say that this is what they're focusing on and the bottlenecks that potentially accompany it. Whether it's refining their own lithium or even extracting it out of the ground, Tesla have addressed all concerns through every single stage of the supply and production process. Yes, there is a narrative of holding your investment through a full economic cycle, but this is more for general investing, perhaps some blue chip stocks or real estate, and eventually your returns should average out to around 7% or so a year, and after enough years it will compound and be enough for retirement. But we are spoiled Tesla investors. 7% doesn't get us particularly excited. Tesla is a growth company at only around 1/10 its target for the end of the decade, just for auto production. That's a lot more growth remaining, with a lot of economies of scale to come too. We don't need to wait out another economic cycle. Tesla even has enough potential during a recession to hopefully see the stock price do some decent recovery. We know what Tesla can do, they just need to rinse and repeat. If demand does start to saturate, then they can start new models, just like we might finally get to see next year with the Cybertruck, or this month we saw with the semi-truck. But Tesla have to offer a low-cost vehicle in order to get more demand. That's the real issue, one around $30,000 even. No, Tesla have to ramp up more batteries in order to get more supply. How they allocate these cells is yet to be seen. They could offer a cyber SUV, they could make a coupe, or a cyber coupe would be my favourite, or something like a van. All vehicles that would generate a great profit per kilowatt hour of additional battery supply. Tesla could probably reach 5 million units a year sold with an ASP of around $60,000, possibly even more units, especially with these tax credits. The profits that would come from that would be insane, and they probably only need to hit around 200 gigawatt hours a year additional cell supply to achieve that. It all sounds achievable. Tesla want to go big though, and there is potentially this new vehicle on the way. Well, we know there's a new model on the way and it costs half the price of a Model 3 to build, so we assume it is going to be smaller and potentially compact, which would be lower cost, and will have likely a lot more demand than we even saw with the Cybertruck. We are seeing just how hard EVs are to make and understanding more again just how good a job Tesla are doing. We're hearing how many problems Lucid are having, along with NIO too. BYD probably get too much praise, they don't make great cars and no profit, they just manage to get the numbers. They just happen to be battery powered and that's about the only resemblance to a Tesla. Making EVs is incredibly hard, making Teslas is just about impossible, and making them in volume production just about takes a miracle, and then making them in volume production at a profit is yet to be seen by anyone else. We know what Tesla can do. They're still hitting their 50% annual growth targets despite the adversity they have faced. And there should be little reason they can't achieve 50% next year. And in fact, a lot of reasons they could hit well in excess of that next year. But what about Tesla's factories? How can they keep growing without more factories? Well, they are perhaps at a run rate of around 2 million right now, and there's still probably about 2.5 million a year capacity left in the existing factories, especially including a revamp in Fremont. So perhaps a total capacity of around 4.5 million without building any more factories. That means they have enough capacity to grow at 50% a year without building a new factory until the end of 2024. Perhaps there is no need to even build a factory until the last moment, as the current factories don't have enough cells anyway. And the longer Tesla wait to build a factory, the more they learn about better manufacturing techniques to build the factory around. So try not to let the short-term fluctuations affect you too much. As long as we see Tesla ramping, then it's the long term that matters. Thanks for listening. Please hit the thumbs up and subscribe. You can follow me on Twitter and talk to me on Patreon.